Are you interested in the U.S. housing and home building market, but unsure how to invest in it? This video breaks down the iShares U.S. Home Construction ETF ticker, ITB, and explains how it gives investors targeted exposure to the housing sector through a single ETF. ITB is a sector-focused exchange-traded fund designed to track the performance of companies involved in the production, sale, and distribution of materials used in home construction. It follows a market cap-weighted index that represents the broader U.S. home construction ecosystem, including not only home builders but also companies tied to building materials, home improvement, and housing-related products. Launched in 2006, ITB has become one of the most widely used ETFs for gaining exposure to the U.S. housing market. Instead of selecting individual homebuilder stocks, ITB allows investors to gain diversified exposure across the industry in one trade. This includes large national home builders as well as companies that benefit from home construction and renovation activity. The fund uses a traditional market cap weighting approach, which means larger companies carry more influence within the portfolio. However, the index applies caps to individual holdings to ensure diversification and prevent any single company from dominating performance. This helps balance exposure while still maintaining a meaningful allocation to industry leaders. One important thing to understand about ITB is that it trades purity for breadth. While many investors think of home construction ETFs as owning only home builders, ITB goes further. Its holdings extend into related industries, including manufacturers of building materials, suppliers of construction products, home improvement retailers, and companies involved in home furnishings and refurbishing. Because of this broader exposure, ITB can sometimes behave differently than a pure-play home builder. ETF. The inclusion of large established companies tied to renovation and home improvement can occasionally soften volatility compared to funds that hold only home builders. This broader mix can also make ITB slightly less sensitive to short-term swings in housing starts while still benefiting from long-term housing demand. That said, ITB is still a highly cyclical ETF. Housing is deeply tied to economic conditions, interest rates, and consumer confidence. When mortgage rates are low and demand for homes is strong, home builders tend to perform well, and ITB often rallies. Conversely, when interest rates rise, affordability declines and housing activity slows, which can pressure home builder stocks and lead to sharp pullbacks in the ETF. Historically, ITB has experienced large swings both up and down. In strong housing environments, the ETF has delivered powerful returns. In more challenging periods, especially when rates rise quickly, ITB has seen steep declines. This makes it a higher risk, higher reward investment compared to broad market ETFs. Another key factor is index rebalancing. The underlying index rebalances quarterly. This ensures the portfolio stays aligned with market capitalization changes and maintains its diversification rules over time. It also means leadership within the ETF can shift as different companies grow or shrink relative to the rest of the sector. ITB tends to hold chunky positions in leading home builders. These companies often represent a large share of the ETF and can drive performance when housing demand is strong. At the same time, the fund maintains exposure to companies that benefit from renovation and remodeling trends, which can provide an additional layer of diversification within the housing theme. So, who is ITB for? This ETF is best suited for investors who want targeted exposure to the U.S. housing and construction sector and who are comfortable with volatility. It can be used as a tactical allocation when housing fundamentals look favorable, or as a satellite position alongside a more diversified core portfolio. ITB is not designed to be a low-risk income investment. It is a growth-oriented sector ETF that can experience large price swings. Investors should be prepared for cycles of strong performance, followed by periods of drawdowns, depending on economic conditions, interest rate trends, and housing demand. If you believe in long-term housing demand driven by population growth, supply constraints, or eventual easing in interest rates, ITB may be a useful way to express that view. On the other hand, if rates continue rising or housing affordability weakens, the ETF could face pressure. Before investing, it is important to understand how sector ETFs fit into your overall strategy. ITB can be a powerful tool when used appropriately, but it should align with your risk tolerance, time horizon, and broader portfolio goals. If you found this breakdown helpful, make sure to like the video, subscribe to the channel, and comment below with your thoughts on the housing market and home builder stocks. This video is for educational purposes only and does not constitute financial advice. Please consult a qualified financial professional before making any investment decisions.